Seismic tabletop news as TableTop's biggest company is breaking up. Here's what it means and what it could signal for a similar proposal for D&D.
Just got real.
This morning, Embracer made the shocking announcement that it was splitting into 3 companies, with separate corporate entities dedicated to tabletop gaming, AAA video games, and indie and mobile games. Now, for viewers of this channel, the news is notable as it means that Asmodee, the biggest tabletop game maker in the world, is once again becoming an independent company, albeit one with a lot more debt than it did before the market split. Let's explain what the deal is with all of this and why it matters to you, who probably is following this channel for tabletop RPG news. Now, for those of you who don't remember or maybe wasn't paying attention, Asmodee was originally a French company founded in 1995 and quickly became known for plucking successful game studios and making them part of their game portfolio. Over their history, they've bought game studios like Days of Wonder, Fantasy Flight Games, Z-Man Games, and Plan B Games, plus started spin-off companies like Atomic Mass Games, Edge Studios, and GameGenic. They're the publisher of many of the big tabletop games you'll find in literally every game store, and even many big retail stores. These are games like Pandemic, Ticket to Ride, Seven Wonders, Star Wars Unlimited, Star Wars Legion, Marvel Crisis Protocol, the Star Wars RPG, Legend of the Five Rings, and a billion others that are too numerous to name. Basically, this company is the board game company, and for a while, they were buying up all the up-and-comers and adding them to their portfolio. Now, in 2021, Embracer Group bought Asmodee for 2.75 billion euros as part of a larger buying spree that also saw Embracer purchase the media rights to Lord of the Rings and Dark Horse Comics. While Asmodee and Embracer seemed like an awkward fit, Embracer spoke highly of its new subsidiary and frequently called out the strong performance of things like Star Wars Unlimited in its portfolio during periodic investor calls and things of that nature. However, in 2023, after a financing deal fell through, allegedly with a fund controlled by the Kingdom of Saudi Arabia, Embracer was forced to restructure and consolidate all of its debt that it had gathered by buying up all of these things. It laid off 1,400 people across its various holdings, including a few at Asmodee, although the impact at Asmodee was much less than in other parts of the company, with some game studios getting entirely shut down or sold as part of Embracer's moves. While Asmodee getting spun off doesn't seem like a big deal because it literally was its own company just a few years ago, there are some pretty big business changes happening with this move. For one thing, Embracer is loading up Asmodee with almost $1 billion of debt as part of the changeover, debt it presumably didn't have before the initial purchase. Additionally, Asmodee's CEO, a guy named Stefan Carville, is leaving the company after 12 years and will be replaced by Thomas Kogler. Embracer also said that Asmodee will likely go back to its previous strategy of M&As, which basically means that Asmodee will likely be a buyer in the tabletop industry in the not-too-distant future. Now, this is all a very interesting parallel to what could have happened to Wizards of the Coast. You probably remember that last year, activist investors tried to spin off Wizards of the Coast into its own independent company, with the premise that would be more profitable to stockholders if that company were independent from Hasbro's toy and entertainment business. You may remember that just late last year, Hasbro had a bunch of layoffs, and that ended up impacting Wizards of the Coast and the D&D studio. That was ultimately struck down, this plan to spin Wizards of the Coast off, but Embracer's move could be a model for how Hasbro could move forward. If Asmodee is ultimately successful as a publicly traded standalone company, would Hasbro be able to resist creating value for stockholders by spinning off Wizards into its own company? It's also a bit of a potential warning, because Embracer just loaded Asmodee with, like I said, $1 billion of debt and is sending it off to its own. And it's likely that Hasbro would probably try a similar structure if it ultimately sent Wizards on to become its own company. Now, debt comes with a pressure to perform, and it would be a trade-off to have a CEO and a corporate structure that's more focused on tabletop gaming. If Wizards were its own company, it wouldn't have to deal with the corporate interference that ultimately led to stuff like last year's OGL debacle, but it could also potentially mean immediate pressure to perform to pay off debt and make stockholders happy. They kind of have to deal with that already, at least the stockholders happy part, but they're kind of protected because they're one part of a greater machine, and so there's not as much scrutiny on Wizards and every little thing that it does. I will say this, Asmodee has been in a weird place for the last several years, and that's pretty evident to anyone who works in the tabletop gaming industry. They've had several startup initiatives, like Edge Studios, which is their RPG studio, sort of stuck in this holding pattern due to a lack of resources. This new structure both opens up a lot of promise and danger, and basically puts the entire tabletop industry, even the tabletop RPG industry, in a weird new spot for the rest of the year until this spin-off occurs and we see what it means and who all could be affected. We don't know what's going to happen with Asmodee, but we'll continue to report on the news as it happens. So what do you think of this big tabletop news to start your week? Let us know in the comments, and don't forget to hit those like and subscribe buttons.